So by now you've learned most of the tools that are required for you to start trading successfully, but you may still be wondering what time frame should you be using, because there are so many of them, from 1 minute time frame, in fact from 1 second to a minute to an hour, 4 hours to a day, even weeks and months. Now this information may be a little bit too overwhelming if you're just getting started. In this class I will attempt to answer that question by giving you real life examples. But before we even dive to that, maybe the question that you should be asking yourself is, what type of a trader are you? Are you a day trader, a swing trader, a scalping trader? Because these different type of traders will focus in different time frames, because they trading for different reasons. And maybe you have your 9-to-5 job and you don't have all the time to be sitting and watching the charts all day long, and for that reason trading the 5-minute time frame will not mean any sense to you, because you don't have the time, or rather enough time, to be actually doing chart analysis on a 5-minute time frame. However, if you start trading from an hourly to a 4-hour to even a daily time frame, then that may make a little bit more sense for you. So it really depends on what type of a trader you are and what trading strategy you're actually following. Now, like I said, I'm going to be diving into some different examples. In fact, some of these examples we did cover them in class number 6. And for reference, in class number 6 we're using a specific indicator that enables us to actually go long or go short on the market. Now, in order for us to start trading, we needed to zoom into different time frames so that we can be sure of the step that we're actually taking, or rather get an earlier confirmation of the market before we actually start committing on that trade. Now let's go back on class number 6 and recap on these 2 examples. Now you can see that I've brought in another indicator, and this indicator actually tells me that, hey, this is actually the bottom where you can buy. And this indicator will actually show you that this is actually the bottom. But you can see here we're expecting the indicator to start shooting here at number 5, but it hasn't done that. Why? Because the indicator will wait to actually get a confirmation on the next candle. Now the best way that you can actually do here is to actually move this. Now you can see that we're on a 1 hour time frame, to move it 50% lower than that, which is going to be 30 minutes. And if we actually move this to a lower time frame, you can see that we are now getting a new candle here. If we move this to another lower time frame, you can see that we're getting another candle. But now something interesting is happening. You can see we are now getting this indicator is starting to shoot in, telling us that now we can enter this trade, which means this trade is actually very, very valid. So you can see that now, because we moved to a lower time frame, now we can see that now we can actually enter this trade. Now let's move back to 1 hour time frame, because that's what we're using here for this example. I'm going to go ahead and reset this and come back here. So now we know that this trade is actually valid. So what I'm going to do is I'm going to go ahead and take the trade, right? So I'm going to go long, and this is going to be my enterprise right here. So what do we do next? Now that we know that this will most likely be the bottom on the market, even though it's not guaranteed, but what we want is that we need to milk and actually get as much profit as possible from the market. So in this case, I'm just going to move this. Obviously this is no point of reference, we're just doing it for the sake of this example. I'm actually going to move this to about 12%. So I'm looking at 12%. Again, when we actually reach 10%, 12%, or maybe let's say 11% or 10% at this stage. So I'm just going to keep it at 10.95. So that is the profit that we're looking for. Why? Because obviously we know that the market will most likely bounce as it has been doing over here. We are expecting the market to do something similar to this. So we are expecting a bounce to maybe to position 1 over here, or maybe somewhere. But I know that the market has been failing to breach beyond the yellow line over here. So I'm looking to take profit just about on the yellow line. So even if I brought this up just about here, if I'm going to be greedy, I can obviously do that, but I don't want to do that. But what I want to do here is just to keep it around 10%. And then what we can do is that once the trade actually reaches that point, we're actually not going to take profit, but we're going to put a trailing stop loss, which is going to guarantee us a profit on this trade. So now that we actually got that, let's actually see how the market played out. All right, so now you can actually see that the price actually did come up here and actually touched our take profit, which means that this trade would have been profitable. Obviously, I was just making this as a point of reference. I'm not saying these are the exact entry price that you should be using. So you can see that obviously this trade would have been more profitable. So as you can see, it really helps to zoom into different time frames, especially time frames that are very close to the time frame that you actually are trading as your standard time frame. Now personally, I like to use 1 hour time frame, 4 hours, and a daily time frame. These are main 3 time frames that I'm using, but sometimes I'll zoom into a 30-minute time frame before I even take the trade. Now that will depend on which asset I'm trading and what trading strategy I'm actually using, because sometimes I like to be holding trades for maybe, let's say, a week or even a month. So it wouldn't make sense for me to be trading on a 15-minute or 5-minute time frame unless I'm scalping the market and I just want to take a quick trade and close that trade very quickly. So that's how I use different time frames in order for me to get a surety on the trade that I'm about to take. Now let's dive into more details in our next class, where we actually start trading the futures market. Now click on the video coming up next and join us in our next class, as we're going to be taking our first trade on trading the futures market. I'll see you there. Goodbye for now.